Guess what happened 88 years ago today? The stock market crash, actually over a two-day period, 28th and 29th of October, market down 23% in 2 days. We have the plunge protection team now to keep that from happening by rigging the markets, you could say that. But what do we have happening on Friday? What's this week been? It's been a pretty big down week. We go to the S&P 500. You're listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 29th of October. Remember, all market crashes occur in October, and we have been watching very closely as we have seen markets top off in stocks and go down pretty substantially. On the day on Friday, down 1.76%. And of course, let's go to that weekly chart where you can see it in review. Third down week after our weekly vertical crossover, going down back on the week ending the 12th of October. Three big down candles, dead crows hammering down. Price percent oscillator hammered down even more at the end of the week. Derivative oscillator gaining lots of downward momentum. We've got a long red down candle with an even longer wick, about the same size as the candle. Price movement well below the 2-day and the weekly. And of course, we have been doing well in our inverse trades. But before we get there, let's talk a little bit more about what's going on the charts. 2-day chart crossed over way back on the 7th of September and then really slid sideways and finally started hammering down on the 2-day chart all the way back on the 5th of October. Then we had that weekly crossover going down, and we see that the price percent oscillator kicked over more down over the first day of this latest 2-day candle, and we see that the price percent oscillator kicked down. Derivative oscillators losing a little bit of downward momentum, but again, big red down candle forming price movement well below the 2-day and the weekly. And of course, now we'll drill in to that 4-hour chart. Remember, we had that crossover going down back in the morning on Tuesday the 23rd. We had the jumping in point in the afternoon. And of course, what did we see happen throughout the course of the next few days? Market slid sideways until the morning of the 24th, hammered down in the afternoon of the 24th, and in the morning of the 25th, popped up a little bit, then hammered down in the morning, a little bit of a recovery on Friday the 26th. We told you as things were moving along to not get overly concerned because of all the downward pressure from that weekly vertical crossover going down. And again, hesitate a little bit to use the Heikin-Ashi candlesticks to make calls on where the entry points were. As you guys know, if you've not had our training on Heikin-Ashi candlesticks, going to offer it one more time. You'll see at the end of today's comprehensive review and forecast, there'll be a link where you can go and take that training for free on the Heikin-Ashi candlesticks. They are calculated differently, so I hesitate a little bit to look at jumping in points, but we'll say around 273. And of course, the lowest of the low in just 3 days now, all the way down to 62.29, so more than $10 of down movement. Folks, that's the magic of the weekly vertical crossover, whether it's up or down, and then jumping in on the Monday following it, or after a pullback, which is what we had on the charts, on that 4-hour chart, and then a crossover going in the direction of our two largest charts, the 2-day and the weekly, that's down. And when that occurred, it ain't rocket science. It's called movement. It's called momentum. It is called chart following, and that is what we do. We follow trends, and that's what we see happening. Now, do pay attention. Derivative oscillator is pretty much flat. Price percent oscillator is still heading down. Again, if it starts to cross over going up, if it starts moving toward the 2-day trend line or passing that, I mean, those are all warning bells. Right now, things look great and have gone quite well. If you pulled the trigger after $10 of movement on your practice trade down, which of course, in the inverse fund, for those of you not familiar, how do you make money when the market goes down? You get into an inverse fund like SH, which is the opposite, the short of the S&P 500. It's been going up since the crossover. So again, That's what's so beautiful. That's on the 4-hour chart. So again, that's where we are in the S&P, down for the day 1.76%. Consequently, SH up right at 2%. Now, let's go to the Qs. The Qs also, we'll start with the weekly chart, move through this a little bit faster. Derivative oscillator gaining downward momentum, price percent oscillator peaking over, going down. Third week of strong down movement. Remember, we had that weekly vertical crossover all the way back on September the 21st. Didn't have a jumping in point at that point because the market kept sliding sideways up the following week. Then a spinning, almost a doji spinning top the next week, and then the hammer down started the week ending the 12th of October and been going down since then. Not every day, but on a weekly basis. We go to the 2-day chart. What do we see there? Well, we see that the latest, first day of the latest 2-day candle down, price movement below the 2-day and the weekly. Derivative oscillator still losing downward momentum, but that price percent oscillator piked over, going down quite strongly. We go to that 4-hour chart. What do we see? Well, of course, it crossed over. It had been pulling back and had sort of tried to fake us out, crossing, and then going back up and then crossing again. Now, typically, when you have things cross twice in the same direction, so if you had tried to jump in and then got worried and jumped out and then jumped back in after the crossover, again, typically, if you have two crossing points back in the same direction, so it starts to cross and then moves back and then crosses again, usually you will see with that second crossing, it's going to have some major movement, which is, of course, what we had happen. And depending on the jumping in point, somewhere around 170.06 down to a low of 164, and that's just in a day. Not even a full, well, just barely a full day. So again, that again is what we see when we look at the power of these weekly vertical crossovers with the 2-day crossover, pull back on the 4-hour chart, and then a crossover going down, particularly in this time of year. Remember, we're in the fall-winter trading zone. So again, keep your powder dry. Watch what's going on here. Derivative oscillators gain a little downward momentum. Price percent oscillator heading down. Ended the day with a green spinning top, means indecision, tending up, but all that movement was within the bounds of the red down candle in the morning. So keep your eye on the prize. Now we'll go back to the weekly, move on to 20-year bonds, which consequently ought to be moving up if the market's moving down. What do we see going on bonds? Well, we ended the week with a green spinning top, which means indecision, tending up. Derivative oscillators lost some downward momentum. That price percent oscillator has also lost downward momentum, going not quite flat, still heading down. We look at the 2-day chart. What do we see there? Boom, the 2-day chart crossing over, going up, has already pushed through the 2-day trend line, now pushing through the weekly. Does this portend a bottom? Perhaps. That is some momentum, but again, the 4-hour, the 2-day chart has now crossed over. Well, I'm sorry, it's just the first day of this latest, so we'll wait till Monday to make any changes to that. But the way we ended the week pushing through on that 2-day chart, remember, it's a 2-day candle, so it is an odd day that it will end on. So it will be on Monday that we'll look for that crossover going up. And we'll see if that actually is confirmed, and perhaps that will start showing a bottom. Remember, the 2-day still in a confirmed down move until that point. Weekly is in a confirmed down move until the weekly chart changes. We go to the 4-hour chart. What do we see? Of course, it crossed over going up back on the morning of the 23rd. Continues to move up in a bit of a herky-jerky fashion, but don't have a trade until the weekly and the 2-day moving in the same direction. And we wait to see what happens with that 4-hour chart. Now, don't forget, we still don't have a drawn candle yet. If it's a huge down day for bonds on Monday, it could pull that 2-day price percent oscillator back over negative, and we could see a crossover going down on the 4-hour too. So it's always possible to have that happen on a Monday. If that does, then of course that could be a jumping in point. So don't give up on a down trade on bonds, not yet. Now gold, remember we had that weekly vertical crossover? Then it was beautiful because the price percent oscillator and the derivative oscillator crossed over at the same time, going up back on the 5th. And of course, for the last 3 weeks now, gold is up. Price percent oscillator moving up. Derivative oscillator gaining upward momentum. We go to the 2-day chart. What do we see there? We see again up movement. Price movement is above the 2-day trend line. We could probably draw a little bit more accurate a 2-day trend line by connecting the latest candles, and that gives us 3 candles, which is what we like to have. At trend line, we feel like we can count on a little more. Derivative oscillator losing momentum. Price percent oscillator still heading up, and again, price movement above, well above the weekly and above the 2-day. And then we go into the 4-hour chart. What do we see? Daggone it. It just won't cross over going up, will it? Gold keeps trying, but we haven't had that crossover yet. Price percent oscillator just won't cross. Derivative oscillator has, so keep your eye on the prize on Monday. If you do have that crossover, that would, of course, be your opportunity to pull a trigger. It tried to cross and then pulled back in the afternoon. So we're still watching and waiting on gold. Folks, that's where we are as we end the week. An exciting week with exciting inverse trades on the S&P 500 and the Qs. And, of course, still waiting for gold to pull the trigger on us and seeing how bonds are going to settle out. Have some great training for you, a great training on trend lines, Heiken Ashi candlesticks, and also information about our book. If you want to support us, we would appreciate you purchasing our book, and that will give you information about everything that we do here. Want you to have that also, and we'll have another training there for you. Take them all if you can. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.